Africa needs investment in infrastructure to meet its economic potential. A lack of funds in transport, communications and power is holding the continent back. The head of project finance at law firm Baker & McKenzie, which commissioned the Economist study, says the infrastructure gap is hugely debilitating.
Since the early 2000s, the amount of investment in Africa has grown exponentially, but as World Bank estimates state, it's not enough. They estimate that gap is roughly $90 billion annually needed, and at the moment it's still around the $10 to $20 billion level, so there's still a big gap.
The most pressing need for investment in Africa is for power. But rail and road infrastructure is desperately required to get goods to market, freeing the continent from a tenuous dependence on commodities. What investment does go into Africa is largely from state bodies, says Calvin Walker, with China leading the pack. Baker & McKenzie's report highlighting a claim being attributed to China's Exim Bank that it plans $1 trillion of investment over the next decade.
It's mind-boggling. I mean, I think this is a number which is estimated, or China estimates, that they would invest over the next 10 years. It's still a huge number, even on an annual basis. I think it's not clear whether that's a firm commitment or whether that's aspirational. If it's real, then that could make a real difference to the continent.
In a Beijing action plan agreed at the 2012 Forum for China-Africa Cooperation, China agreed to phase in zero tariffs on imports. With billions of dollars in infrastructure deals on the table, the aim of this year's forum appears, at least, to be moving away from a Chinese dependence on simply African commodities and raw materials. Richard Bestic, CCTV, London.